but once it
Right.
works great.
No, yeah, you're getting it
What is
for
it?
sure.
99% of the time it works 100% of the time. All right. Welcome to the RealEst podcast, the realest podcast in real estate. My name's Josiah Holstein, and I'm your host today. And joining me is Scott Davis of U Mortgage. How you doing today, Scott?
I'm very good, Josiah. Thank you for visiting with me today on this beautiful Wednesday afternoon. And I look forward to getting question bombed by you. So,
Yes, sir. It's time for a good grill in here. Now, before we get into this all too hot and heavy here into my grilling, um, I'd love to get to know the man behind the mortgage. Now, how did you find yourself getting into mortgage and lending?
the man behind the mortgage. So, I've been doing business here in Springfield and Southwest Missouri for over 30 years. First 15 years of my career was with insurance, and I owned an all-state insurance agency. I sold property casualty, life and health, financial services. And through the time that I put in, building books of business, working with families, with individuals, it was a natural progression for me to get into mortgage lending and work with folks on making the one of the largest purchases, largest investments they'll ever make, and help them get started and a lot of times building generational wealth.
Oh, ain't that great to know? Um, Having someone as yourself that understands that is really good to have in a loan officer, LO. Um, I guess another question about you. Um, how long have you been in lending now? And
Okay, that's a good question. So I've been in lending now almost 16 years. Um, my first 15 years has primarily been working with banks,
okay.
and now I'm with U Mortgage, and I'm a mortgage broker.
Oh,
And it just opens up some avenues for me in my lending career that I didn't have previously.
okay. And so having that career switch and jumping from insurance to traditional lending to now mortgage brokerage.
Mhm.
Out of all three of these, which one did you like the most?
So I definitely love being a mortgage broker.
Okay.
I have just a broader range of products to help more folks, and I can help some folks in some difficult situations that maybe didn't think that they could get a loan done. And once again, just the broad portfolio of things products that I have to assist folks with has made this pleasurable.
Gives you a lot more
It
maneuverability.
does, it does, and it opens doors for me and the folks I work with as well.
Well, that's good. We're all about opening doors, getting those opportunities out to people. Uh, Helping people get into homes is just a great thing.
Yes, yes, and we have many ways of doing it here. So,
Yes, sir.
comparing your interest rate to your neighbors is not a good comparison.
No,
So
I agree.
I'd really rather see people, get comfortable with where they want their payment to be than chasing an interest rate.
I'm glad you said that because I hear a lot of people saying they want to wait for rates to drop right now. And I don't think we're going to see rates, and I'd love your opinion on this, drop below a 5.5 within the next year.
I'm no Warren Buffett. I do watch the market. I
Yes.
I agree with that. I don't, just my personal opinion, I don't think we'll ever see rates again in the mid twos, low threes, and I did a lot of those
Yes.
loans. And so, that was nice when it happened, but it was short term because our investors weren't making any money at that point, and it wasn't sustainable.
Yes. I don't think we'll see that again. COVID was a very weird time for the
It was.
market, and I think it got a lot of people thinking that that 2 to 3% is normal, or even that 1% that some people achieved, which it is not. Would you say we're seeing a lot more at like 6.5 for FHA and like 6.8s, at least that I've seen pulled.
Yeah, I really hate to get into the rate conversation, but yes, an FHA is a unique product, and I believe you're on target there. The FHA, the credit score is not going to be as big of a factor
Okay.
as it is on a conventional loan. And yes, I would concur.
Okay. I mean, those are historical average numbers as well. We can
Hmm.
look back to the 70s, 80s, and even in the early 90s, we were
Great
seeing
point.
interest rates at 10%.
Right.
So if we're getting in people at 6%, 5.5%, granted home prices are higher than they have been in the past, that's historically average. So to double back on what we said earlier, if you're able to meet that minimum monthly payment, whatever you want to get into, and you're trying to stay at this home for 5, 7, 10 years and actually grow your roots, amazing financial decision. Long-term investments year over year end up paying out.
And that's a great point you brought up as well. That's a key factor when buying a home is just thinking through how long you're going to spend in the home
Yeah.
and setting up the loan product to coordinate with that appropriately.
Yes. Beautiful answer. Thank you. All right. Now, rising and falling of interest rates. How have these rates affected home buyers, and what's your advice for those on the fence about buying right now?
So I really hate to see folks holding off on the market. The
Hmm.
market's going to go up, the market's going to go down.
It has its ebbs and flows, for
Right.
sure.
You're missing out on opportunities, I believe, by holding, sitting on the fence right now.
Yeah.
So that's pretty much, once again, that's a little bit of I hate to see that happening. Historically speaking, home values have always increased, and you can always refinance as well. I know there can be some expenses involved with that. Of course, I'm a loan officer, and I love to get creative with that and keep your costs down.
Yes.
If I can do a streamline for you, or find ways to do a refinance if interest rates drop, I would
Oh,
want to
yeah.
do that for you. But once again, just not purchasing, not making an investment because the market is unstable right now, I believe you're missing out on an opportunity.
It's a huge miss out, especially if you're going to live in this for a while. As we said
Amen.
earlier, like those
Hmm.
7 to 10 years, most people don't even sell their home after that point. You'd be in a good position. You can always refinance when the rates drop. And if I'm correct, you can correct me if I'm wrong, you can do it as soon as 6 months now.
It's different for different loan products,
Yes.
and yes, a lot of times we can do a streamlined refinance on some of the government products in the 6 month time period.
Oh, wow. So get in contact with with Scott here. I'm thinking of someone else.
Scott the Czar.
Scott the Czar. Scott the mortgage czar here. I love it. All right. What is the biggest misconceptions that you see people make about mortgage and lending?
Maybe that you have to have a perfect credit score, maybe that you have to have a lot of money down.
Oh, yeah.
But that's why I like being a broker now, as opposed to when I worked for the banks. Nothing against the banks. The banks have their purposes,
Yes.
but as a broker now, I can do some true manual underwriting on some lower credit scores.
Oh, wow.
And, once again, I've got a good portfolio of loan products to minimize the amount that you need to come to closing with. So you don't have to have a perfect credit score, and you
Hmm.
don't have to have a ton of money to purchase a house.
That's great to know. Now, that begs another question to be asked. What is the difference between traditional lenders and a mortgage broker?
Well, so I'm going to say a traditional lender, we're referring to a bank.
Yes,
Okay.
yes, such
Yeah.
as Great Southern, something
So,
like that.
so I can't speak for each bank, but as with my history, with the banks, I would run into some bank overlays because they're going to bundle their loans together
Hmm.
and sell them on the market. And so they're going to have some overlays that are particular with that bank and the way they're bundling their loans. Here, as a broker, I'm selling directly to my investors. I'm working directly with my investors, and we're cutting out overlays, and
Ah,
we're actually underwriting to our investors' guidelines. So that's a big advantage and one of the reasons why I was excited to be a broker.
that's good to know. Because, I mean, I don't think most people realize that mortgage brokers do exist and that is an option out there.
Yes, as a mortgage broker, that's one of my favorite marketing endeavors is calling my local realtors and just letting them know there's an outlet. If you've got a loan that's going sideways, there's a good opportunity that I can save that loan or I can get it on a path that's savable. And I can do that as a broker where I didn't quite have as many opportunities with the banks.
Okay, that's good to know. Thank you very much. And now, as for loan products and strategies, what loan programs are underutilized but could be game changers for home buyers now?
Oh goodness, it's amazing what I run into on VA loans. I
Ooh,
love VA loans. They're a great loan product, and there's just so many myths out there that people think that I can't do a VA loan because I already have a VA loan. Well, that's not true, and I can't do a
yeah.
VA loan because my debt to income ratio is 50%. That's not true. We work off a residual income on a VA loan. So VA loans, I don't think folks are as knowledgeable about them as they should be. The other loan products that I think are really valuable right now, and I don't feel people are utilizing, when the inventory got bad in the real estate,
Yes.
I started getting knowledgeable about construction loans. And
Uh-huh.
now that I'm a broker, I'm not tied to a construction loan that has the bank requirements. Now I can do construction loans I could do a VA construction loan, 100% construction loan. I
Huh.
can do an FHA construction loan. I can do a first time home buyer construction loan. You find a piece of land down at the lake that you like, and we can build a house for you with less money than you would think. We have to have an approved builder, and we have to have some plans and specifications, but we can get it done.
Well, I'm glad you said that. 253 Whitefish Bay in Lampe, Missouri. Give that a check on the MLS. Beautiful lakefront property,
Yeah.
25.6 acres.
Yeah, put your plans together, build right there, and have a nest at the lake. I
Oh yeah,
love it.
that'd be beautiful. It's a great
Absolutely.
property. Um, that all right. Now, are adjustable rate mortgages, ARMs, worth considering in today's market, or should buyers stick with fixed rate loans?
That is the question that I didn't like.
Yes. I
So, no,
yes.
you know what? Adjustable rate loans, listen, I've done my share of
Yes.
ARM loans, and there have been times where they're right, they're the correct product for the correct situation.
Yes.
But right now, what I'm seeing is that there's not an advantage where I'm at with the ARM loans. I don't see a big pricing difference. I don't see a big advantage on interest rates. And so, if you can get the same interest rate on a fixed rate loan, why wouldn't you do that and not risk the
Yes.
adjustability?
I think that ARM loans are not the best option for most cases for most
For
people.
most cases, I
Yes,
agree
I
with
can
that.
see where it falls into place for some people. An example of an adjustable rate mortgage is a balloon type loan where it starts at a fixed rate and then over time the interest rate continues to
That's the
grow
type.
over the time of your loan. That is a type of ARM loan.
Mhm.
That's not all ARM loans. There's certain scenarios where that works well,
There
but
are.
yeah,
There are, and once again, the length of time that you're going to spend in the house, makes a big difference. And that might be a reason why you would choose an ARM loan if
yeah.
you're not going to be there more than 5 or 7 years, and you plan on moving
Oh yeah,
within that time.
would you be able to use like an ARM loan for investment properties then or something like that?
Yes, I believe so, Josiah.
Okay.
I would have to research, that particular situation, but yeah, I do believe that we do have adjustable rate mortgages for investment property purposes.
Okay. We'll just chalk that up as more information needed.
Yeah, that'll be another segment of ours.
Oh yeah, for sure. We'll have to come back to it. Uh, so for buyers with lower credit scores, what options do they have to secure financing right now?
Buyers with lower credit scores, as I mentioned earlier, we can do some manual underwrites. We can go down to 580 on credit scores with some
Okay.
compensating factors and do a manual underwrite on those. Since I've got into this business, I've held on to this, and I call it a path to purchase. If I
Okay.
have a younger borrower or a borrower in general, and they're not there right now to be able to purchase, I will help devise a plan with them, and we'll say, okay, this is what we need to do, and at this point, we'll be able to purchase. So, that's another option, whether I've got to work with a credit advisor on that with them, or whether we just need a little more time, or whether they just need some understanding on what their portfolio looks like, how to put things together. There's options. And you've got to talk with a good LO, a reputable LO, and I think that's your first step. Just get a plan to
Yes,
purchase.
being able to achieve your goals in real estate does require some plan. And so having a good agent and a good lender that's able to devise and help you achieve that goal with a solid plan behind it is extremely important. Knowing how much money to save for your down payment, knowing exactly where you need your credit to be at for your home loan. It's good to have that correct and proper guidance through this
Yeah,
process.
so a good realtor is vital to the process. Someone as yourself
Yes.
who understands, what it's going to take maybe to get your offer accepted, realistic expectations with the listing
Yes. And
or with the buyer. Yes, go
that's
ahead.
another thing too is realistic expectations.
Amen.
And if any, no expectations at all, because anything can happen at any point in time. And so I think it's good to let people know, don't go in thinking you're going to have some extravagant piece of property or the deal's going to go a certain way, because I've worked many deals myself where it just curved out of nowhere and we don't know what happened. Well, we know what happened, but we don't know how it happened,
So on the lending side, this is a cliche
Yeah.
answer, but all lenders or good loan officers will want to have everything done right on the front end. They will want to have
Yes.
things documented correctly on the front end. They'll want to make sure they've got your income correct. They want to make sure they got the collateral if they're needing the collateral to get the job done. There's the property side of it as well. We want to make sure that the collateral that we're using, the home, that
Mhm.
it's going to be insurable, that we're going to be able to lend
Yes.
on it. So you're right, Josiah. There's many, many different aspects to it that could go wrong. The better job we do on the front end with our clients, the less possibility maybe we have of hitting a speed bump there, but
Yeah.
or something that totally would kill the file. So yes, you're right.
Yeah.
There is hazards.
There's plenty of them out there.
Hmm.
Now, that's not to get hung up on any of them, of course,
Right.
because where there's a rock in your path, there's always a way around it.
You know what? And that's what I love about my job. I
Yes.
love putting the pieces of the puzzle together. I love getting folks to the finish line. And if I have to get creative with a file, I enjoy doing that as well.
Oh, of course.
Yes,
And
absolutely.
it's good to have someone there that knows what they're doing in that experience, such as yourself. So that way you just get a phone call saying, hey, here's what went wrong. Here's the file I need. That's all I got to have to continue this, and we're good to go. Like you already figured it out
Right.
for them, and you know the next steps.
And you hit on something good there too. As a loan officer, I believe time teaches a loan officer how to do this, but there's some things that you want to address with your borrower right up front if something's
Yes.
going wrong in a file. But there's some things also that you don't want to borrow your borrower or your real estate agent with. And if a speed bump comes up, a good loan officer will work through that, and you may not even know it occurred.
Perfect.
Yes.
What is it? My broker likes to say the good sign of a real estate agent is you just get a recap of it.
Right? Yeah,
Yeah.
yeah, just
That's it.
regurgitated to you. That's
Yep.
right.
Hey, here's what happened. Here's how I dealt with it. We're good to move forward.
Yeah.
Uh, and now navigating the challenges and the industry itself. What's one of the most challenging deals that you've worked on, and how did you get it closed?
I've been doing this for almost 16 years now. I've worked on a lot of challenging deals. Some of the toughest ones, believe it or not, have been, sometimes some doctor's loans. We can get into some situations with student loans on those that can be nightmares. And and I can think of many challenging situations, but I can say this, with every challenging file I've had, the way I get through it is I work through it with my borrower, with my
Mm,
client. I'm transparent. We talk through things. We talk about different avenues that we can take. And then once again, I use some of my experience to get over the hurdle or to get to the closing
Yes.
table. And I think that has to do with experience as well.
Yes.
I don't get so upset if I have a file come back and say, oh, it's suspended, which no loan officer wants to see a file suspended. But
Yeah.
if I see that, I know there's a reason for it, and I know I've done a good job on the front end, and something has come up, and we handle it with optimism, and
Yeah.
we handle it also with a mindset that we are going to get through this, and we are getting to the closing table. So
Yeah. Why worry about something you can't control?
you know what? And there are uncontrollables. I can't
Yes.
control if something comes back bad on my appraisal. Yeah, I can't control if a verification of employment doesn't match a pay stub. I mean, we've talked about the
Yes.
hazards, but
Yes.
yes, I believe experience and a good team behind you as well
Oh yeah.
helps you get over those hurdles.
Having the right people behind you,
Yes,
it's so great having that.
yes, yeah.
At my brokerage, there's been many a times that
I'm not Einstein, but I think I've got some people on my team that may be, so.
they might be. Yeah, it's Andy, isn't it? All right. Now coming into close here, what is what's your take on the future of mortgage lending? Are we heading towards a buyer's or seller's market, and how should buyers prepare? Spring has truly sprung, and we're
Oh, that
getting into
sounds
this.
like such a complicated and how could you do that to me? What a question. I mean, really, you're going to ask me? No, I'm just kidding.
Hey,
So
it's
you
hard
know
hitting.
what? I'm gonna keep it simple.
Okay.
You know what? To me, I've seen that inventory has gotten a little bit better.
Yes, I've noticed on the MLS that we have had a handful of homes starting to come in slowly but surely. About 3 months ago, I saw our SOMO MLS sitting at about 3,800 homes, 3,900, and now we're
Okay.
closer to
So
4,000.
correct me if I'm wrong, but I believe I'm also seeing that home prices have either stabilized or I believe I've seen them come down a little bit. That's all, that's debatable, but I
Yes.
believe.
I'm editing this video and I'd like to correct myself. It is March 27th currently while editing, and it was March 26th whenever I was recording this with Scott over at U Mortgage. Um, so I'll pop on over to my next desktop here. I'd like to correct myself with saying we are currently at 4,056 on the market right now. We have 4,056 active listings on the market as of March 27th. February, we had our average at 4,063, and 3 months ago, we peaked at 4,549 in November. Year over year, I'd like to mention, as of March last year, we were at 3,262. So, year over year, market is much stronger than what it has been for active listings. Though, in saying this, I'd like to mention, as of February 25, we were at 793 sold listings. And in March of last year, we were at 1,027. Now, the market hasn't come out for March just yet, so I'm curious to see what that number comes in at. I don't think it's going to be too much higher than we were at 793, though in the last week of March here, I've been seeing a lot more homes get sold. My broker just sold a home in 5 days. Um, Good for him. Claps for Lauren. Uh, Now, as for listing price, we are seeing these begin to stabilize. So Scott was correct in his belief there. Um, we see over the summer we had at May 244, 245, and then it peaked a little bit here, came back down, and then dropped a little bit. There wasn't a huge gap between that 241 and that 252. Then we had it jump again up to 253 from a 241. Um, a larger substantial jump there, and then a large substantial drop down into January at 230. And then now we're seeing it rise back up into February average at 245, and March is going to be very similar to that 245. So thank you for letting me correct myself.
They've at least stabilized.
I like to preface this with saying there is a separation between inefficient and an efficient market. Beautiful example of efficient market is Walmart, gas stations. Most of the time, whenever you go into these businesses, no matter where you are in the country, they stay relatively the same on their price, relatively the same on the location of the items and everything. Whereas real estate is an extremely inefficient market. You could be in one neighborhood across the street and chuck a rock through your neighbor's window, and that house will still cost 100 grand more just because of the name of the neighborhood. And
Right.
so, coming back into real estate here, um, I think it's important to note that depending on where you are,
Right.
it will show differences in your markets. It's not just a
So
national.
to answer your question, with the way I'm seeing those two factors,
Mhm.
I'm going to say it's a buyer's market right now.
I think I could agree with that.
And I know that can be debatable, but
Yes.
once again, just based on home prices stabilizing and
Yes.
the inventory also looking a little bit better.
I've seen a lot more sellers becoming more and more negotiable as time goes on and accepting more seller concessions and different negotiations and offers that buyers
And
have.
I believe homes are staying on the market a little longer right now as well.
Yes and no. It
Okay.
depends on the home. I've seen some starting to sell after like 4 or 5 days.
Okay.
My broker had a home on the market 3 months ago, and it was taking a little bit to sell. And so they took it off the market for a minute, relisted it here in spring, and it was gone in 4 days.
And that's the kind of information I lean on you for. Just
You're welcome,
I
sir.
appreciate you.
I appreciate you
Yeah,
too,
yeah.
Scott.
Thanks for visiting with me
Of
today.
course. It's been a great time. I hope you guys enjoyed watching and listening to me grill Scott in our little Q&A conversation here. It's been a great time.
Have
Thank
a
you.
beautiful Wednesday afternoon.
Y'all have a beautiful one. I love you.
Bye.